Traders, I'm looking at the euro dollar. What I want to do in this video is show you why Tradingview is my go-to program for technical analysis. I do all my TA in here. I'm in Tradingview day in, day out. I'm trade professionally. I'm trading multiple accounts. This is it, guys. This is my go-to. And the beauty of Tradingview is that, the tools, the features and tools that it offers are second to none. So what we'll do with this is a bit of a TA, technical analysis, but I'm going to give you a trade idea with the euro dollar. And I just want to point out I did a video some time ago, if you scroll through the videos that I uploaded, and it was called something like, a trading plan is imperative. You must have a trading plan. Here is mine. All right, so this is going to be a continuation of that series, I guess. You've got to have a trading plan. And I did another video on risk management, so really important stuff. So this is part of my trading plan, and if you go back through those videos, you'll see that I'm a trend continuation trader, and I'm looking for opportunities where there's a swing high, swing low, retrace, for example, sell. Swing high, swing low, retrace, sell. Right? Simple as that. Lower highs, lower lows. Okay. I won't go into the strategy so much in this video because I've already done the video on that. But this takes it to another level, the next level. You can build an account if you have an edge, if you have a plan, strategy, risk management, and an edge in the market. And honestly, the features and tools in TradingView will give you that edge. So here's the thing with this. Okay, we can see the euro dollar is under pressure, without a doubt. The most important thing to understand is you need to know the strength and weakness of the individual currency. So we can see that the euro dollar is weak, but is the euro under pressure, and is the dollar actually gaining strength? It may or may not be, right? And depending on the situation. So you need to look at that. So what I've done here is I've set up a 3-chart layout. If you go up to the workspace, and this is the layout that I've selected, and I've selected the interval. I want the same time frame transferred over. Okay, so if we open that up, I've done some drawings here and we'll have a look at that in a minute. But what I've got now is this layout, 3 charts, and the bottom left, I'm looking at the euro currency index, the EXY. Bottom right, I have the DXY, the dollar index. Comparing these two, I think, is really, really important. So we're looking to trade the euro dollar. So let's have a look at the euro index on the left and the dollar index on the right. I'm going to open up the euro index. And the things that I was looking at in this chart are, okay, we can see that this is definitely under pressure, the euro index. And the draw on liquidity is the low, or the sell stops resting under over here, these lows. So I've marked it up, liquidity pool. It's already tapped into, so the candle wick on this candle you can see here, right? Liquidity under here that's been hit, and you can see the reaction off that. This is a big level. This is a big support level. And, the market is going to be hunting liquidity. And the other thing that it's going to look to do, it's going to look to rebalance. All right, and it's, it'll trade through gaps, right? So we have price gap, in my opinion, will look to be traded through. So I'm expecting a pullback up in here, and then possibly we see continuation. So with the euro, I'm looking for the pullback, definitely with this price gap that we can see here. Okay, so there's no question. So when I look at the euro dollar, I'm not going to be selling at this level. I'm going to want the pullback based on this chart, bottom left. All right, so let's just have a look now at the DXY. We'll open that up full screen. And the same thing, we can see that this is traded. See these candle wicks. Okay, this is buy-side liquidity. The buy stops that are resting above here prior to this sell have been hit, and you can see the reaction. The next port of call, if this continues bullish, is going to be these buy stops up in here. So that's a draw on liquidity that I'm interested in. And again, we're looking for, if you go through my video, the trend strategy that I was talking about, we look for swing low, swing high, retrace, swing low, swing high, retrace. Okay, we look for the opportunity. Now, from this chart here, I can see that if we pick up the Fibonacci, I love these tools, this toolbar up in here, you can put your favorites up in there, grab your fib, swing low, swing high, My rule of thumb is I need to see a pullback into, see the 50% here? That would be my bottom line. So with both the DXY and the EXY, the Euro Index, again, if we grab our fib, high to low, well, I mean, a pullback even takes me further up. Okay, so on the daily chart, that's what I'm going to be looking for. So I've determined from these two charts here that I need a pullback to get involved. And we know that the euro is weak and the dollar is strong at the moment. So with that, we go into this chart and we know that we don't want to be selling at that level, right? I'm going to be looking for the pullback. So if we pick up this tool here, I mean, look left, this is a big level right through. There's a point of interest. This here is also a point of interest, this high, and it coincides with this. What have we got over here? Yeah, this whole range here, this value area range prior to this this bullish move. Okay, I'm inclined to pull that through there as a point of interest. It's this range that I'm interested in. The Fibonacci, well, we could pull it from this high to low. See how the 50% of the fib coincides, or the 50. We've got the 50 here, the 61.8, and it works beautifully within this range. So that's what I'm interested in, is a pullback up into here. If we don't get it, I mean, look, can this thing roll over and move further south from here? Yeah, it can. But I don't think I'm interested in chasing that. I would let that go. If it pulls back up into my point of interest in here, I'm going to be looking to short for sure. Okay. So that's the plan of attack with this. Now we could set up a sell short position. We could go with, at least at the 50. That would be a thing. Right. Now, where are we going to place our stop and where's our target? Well, I'm going to look left and I'm looking for all these levels here that we see where the candle body closes and opens, where there's a candle wick. You can pull that through. So there's a potential target down here. There's liquidity under here. It's looking for liquidity. It's going to potentially hunt the stops that are resting under here, right? So that's a target. Same thing, we can pull these lows across, and on the lower time frame, that would separate out. And then we've got, well, the lows under here, more importantly, right? So that is my ultimate target down in here. That gives you a 3.7R outcome if this continues bearish. Your trading plan might include that you take partial profits at 1R or something like that, and no harm in doing that. And then moving your stop loss to break even at 1R as well. So then you're in the money and it's risk-free from that point onwards. Now, how do we know where to place our stop? Well, there's a couple of things that a couple of tools here that I like to use. And I mean, look, we've got a huge array of indicators, but the only one that I'm really interested in is the average true range. Now, if we have a look at the ATR, you've got to mouse over the last candle. In other words, mouse over this last candle, and if you look down bottom left, you'll see, well, 59. The average true range is giving us 59, 594. Looking at that number here, 594. If you have a look at this tool here, right, we open that up. In fact, let's just go down to a 4-hour time frame. We'll work on a 4-hour time frame. Okay, here we are. So this is what I'm interested in, and just dragged it across here. Let's have a look at the ATR on the 4-hour. This candle, you want to mouse over this candle and you can look left and you'll see that it's giving us a value of 234, so 23. Okay, I'm going to run with that on the 4-hour time frame. So if we grab this tool here and we pull the stop loss, have a look. This figure here, it's giving us 43. So I'm going to go with 1.5 times the ATR approximately. So 23, the ATR is giving us 23, the average true range. Let's just round it to 24. 12, 24, 36, right? Okay, so 1.5 times the average true range is about 36. There it is right there, 35, 36, 37. You can see there. All right, now if we look left, we can grab this range. See how this range here coincides. I'm just going to mark that up as a 4H, point of interest. What I'm picking up here is this candle high and this candle low. I'm looking at this value area, this ranging price action through here, the high and the low of the red candle. Value area, resistance, and more importantly, the high. See how our stop loss now is above this high back in here? So that works with the average true range. as a valid stop, 1.5 times the average true range, and then we go for our target. Well, we got a 3.48 target with this trade idea. So that's how you can use some of the tools in TradingView. More importantly, the multi-chart layout to give you an edge in the markets. So now what we're going to do is use our indicators on TradingView to make our job really easy. Here's the strategy, and it's looking at a 15-minute chart. I'm just going to draw something for you. Consider this a 4-hour time frame. It's trending, bearish trend. And what we want is an opportunity to get involved in the markets after an expansion and retrace, okay? Expansion, retrace, we want to get short. Market expands, retraces, we want to get short. Here's an incredibly simple way to do this. We're looking at our indicators here, and it's a simple strategy. We know that the market's trending bearish. These indicators are telling us that the bottom indicator has a strong hour, 2 hour, 4 hour, and daily. I'm not so worried about the weekly. We want to get involved when these indicators are red and after these green bars shift into red. So we ignore that signal, we ignore these green signals. And what this is giving us, 15-minute time frame, is this move right there. The key with this is we don't take this red signal. We want the red signal here or here, down triangle. So let's clear everything and go back and have a look. Remember, the key thing with this is it's a red trend, bearish trend, but we need to see the 15-minute turn green first and then give us the red signal. All right, I'm interested in this signal. After these green bars, we have red under and the multi-time frame is starting to shift red. We can take that trade it on the pullback, stop above the high, above the cloud, nice outcome. And in terms of the higher time frame levels, well, we've got them on the chart. With this indicator, you can see the levels, and our trend channel is giving us, if you have a look here, for example, switch it on and off. We want to take notice of these levels. It's a bearish trend. We want the candles to turn green and red. So we can ignore these signals. We ignore the green. We don't take any of those. We're looking for the higher time frame trend. It's the pullback. This is the trend. This is the pullback. And we want to see these candles turn green, and then we take the signal when it shifts into red. Now that more or less wraps up the video. Just wanted to give you a quick introduction to the indicators. Here's an invite to jump on board, gain access to the indicators, our Telegram signals group, our VIP members chat group, trading tutorials, and it's only $19.95 per month. So with that, I hope you have a great day, and I will see you in the next video.